Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay, and I'd like to start today with a thought experiment about volatility, my favorite subject. The VIX Monday was at 1845, and I just want to think about this for a second. Is that a cheap VIX? Is it an expensive VIX? Or is it just about right? Well, if you go back to 2000, that's actually about average for the VIX, so it's right in the middle there. If you look from 2011 or 2018, that's actually an expensive VIX. The VIX spent a lot of that time period in the mid to low teens. And if you look since the pandemic, that's actually a cheap VIX. So for me, when it comes to the VIX is relative and the VIX is mean reverting. So when the VIX is high compared to what it has been lately, it wants to trend lower. When the VIX is low, it wants to trend higher. And we saw a huge rally in the market and a huge sell-off in the VIX. I kept on saying, as soon as this rally stops, expect a big return to volatility in a quick way, and we got exactly that. We rose from 1845 all the way up over 24 today, just in a heartbeat, and a modest pullback in the market given where we were. So that's an interesting factoid to me. VIX traders and protection buyers are placing their bets that maybe that was just a bear market rally, and that remains to be seen. Now, these past few days, everyone's been talking about the Fed wanting to add rate hikes faster, cooling off this inflation. They've said their intent on cooling off the inflation. I think people are putting their emphasis on the wrong point there. The Fed's also saying they're going to reduce their balance sheet. That's got a bigger impact on the market for me. Less bond buying, less liquidity adds to volatility. I think that's playing a bigger factor in the market than where the interest rates are. And finally, whether or not this is a bear market rally or not, it's really going to depend on the consumer. So far, the consumer has not really been hit yet with these higher prices. At some point, something's got to give. Either corporate profits have to be lower or the consumers are going to start buying less. I'm betting eventually the consumers are buying less. I'm watching the Dow transports as the leading indicator there. If inventories start to drop, people are shipping less. Dow transports are the biggest loser the past few days. So I'm very cautious going forward, and just keeping my head on a swivel and watching for protection as usual. For Equity Armor Investments, I'm Joe Tigay.